Why were yields in crypto so high in 2021? The answer might shock you. No, but really, there's multiple answers to this. Some of them are clearly wrong. A lot of them have portion of the truth, but I haven't seen an explanation that sums it up together. So I'm going to try to do that. I am going to start by giving you the wrongest explanation that I've seen in this space. And, please do not think like this. It's people saying like, well, yeah, of course the yields are high because that's crypto and it's great. And that's a new paradigm, higher yields. This is dumb, right? There's such a thing as arbitrage. If you have higher yields in one place and lower yields in another place, these things tend to equalize. So you have to wonder, why are they not equal? Why did you see in a real economy lower yields than you saw in crypto? That's what you need to explain. All right. So now that that's out of the way, second thing, different things are being referred to as yield by different people. And I think that's misleading. There's three broad categories that I would see. One is staking. So in staking, protocols like, and by that I mean, proof of stake, validation. So like you have in Tezos, for example, there's block reward. It's not yield in the sense of a bond. It's in the sense of you get rewards, like in the same way that the miners get paid for creating blocks. If you look at percentage terms here, again, you need to be careful and adjust them by the inflation ratio. So in Tezos, if you are efficient at picking, you'll beat inflation by just about 1%, which is nice, but it means it's not 6%, it's 6% minus 5%, or give or take. The second category is DEXs. So SushiSwap figured out in 2020 that they could bootstrap liquidity by giving away a token to people who are adding liquidity and saying, maybe this token is valuable in the future. So if you want this valuable token, add liquidity now. This brings liquidity, which brings trading volume, and then the trading volume can make it self-sustaining because the fees from the trading volume can keep the liquidity present. That's a theory. It can work, but then it became a sort of a degen thing where you had this 1,000% yield, and it's basically a useless token that's being pumped up, and people just buy the token, and very quickly it loses its value. So it advertises very high yield, but in practice you have tons of impermanent loss, you have ton of inflation associated with that. So here you can understand why the so-called yields are high. It's not really a yield. And the third one, which is much closer to what is referred to as yield in finance, is lending protocols. So there has been a bunch of DeFi lenders. Sometimes they look like stable coins like DAI. Sometimes they look like things like Aveo Compound. And of course, we have some on Tezos as well with Uves and with Yupana and Colibri and others. But the general principle here looks a lot more like traditional yield. Someone has risky assets. They borrow against those risky assets, and then they borrow at a certain rate. Now, why is that rate high? And the answer most people will give you is, because it's so risky, right? If you have a high rate at one place in the economy and another rate which is lower, clearly the difference has to be explained by risk. It's a simple explanation and it's partially true, but it's not entirely true. And I think that's important. Now, if you look at what happened in the past few months, it's very easy to turn around and say, well, clearly, look, the risk was there. You had lenders like Celsius that imploded. You've had Luna that imploded. A bunch of these things imploded. So yes, clearly there was risk. But a lot of things didn't go belly up. Like MakerDAO didn't have a problem. Avid didn't have a problem. Compound didn't have a problem. The DeFi on Tezos didn't have a problem. So the DeFi protocol did quite well, the ones that were correctly written. So why the discrepancy? Now, one explanation is to say, well, it doesn't matter if some of them did well and others did not, because you couldn't predict which one were doing well and which one were not going to do well. Or at least, the people with money to lend did not have any way of really knowing what was risky and what wasn't, and therefore you see the same risk rates everywhere. That's possible. I mean, when you see that large institutions went into Luna, I guess you have to give some credence to this. Like, I guess they were not really, did they know what they were doing? Did they just not understand the economics of it? It's possible. I don't know exactly, but surely it is possible. Just because you see a lot of hacks in smart contracts does not mean that it's impossible to write secure smart contracts. It means people don't care. Right now, there's very little penalty in or reputational cost in smart contracts being hacked for millions of dollars. That's the world we live in. So I think it's partly that market participants couldn't tell, but it can't be the whole thing, because you can look at this thing and you can know what's serious and what's not. You can know what is based on sound economic principles and what isn't. So the other explanation, which is not risk and which I find quite interesting, is capital shortage. right? So in this scenario, you had a bunch of demand for borrowing, and that demand couldn't be met. There was a shortage of capital. Like not enough money was able to flow from regions of the economy where you have low rates to this region where you have high rates. And I think the main barrier here would have probably been regulatory. I think a lot of these lenders who normally equalize in arbitrage markets are going to be large institutions, they're going to be banks, and they have compliance department that tells them, well, wait a second, you can't participate in this DeFi protocol. And as a result, you see this gap. You have people who want to use DeFi, they want to stay on chain, they don't want to use centralized actors. But on the other hand, you have lenders, traditional lenders, who also don't want to touch this DeFi, or even centralized crypto lending. It's crypto, they don't want to touch it. And this shortage of capital explanation is quite interesting, but because we had the big blowout in the past few months, I think people are going to forget about that. They're going to say like, oh yeah, it was, of course, all along it was risk. But I don't think that's a full story. Another explanation which I saw recently, which I think is interesting, is that it was all Anchor. It was all Luna. The yields were so high in Luna because they were artificially propped up by inflation of the collateral. And as a result, people wanted to power in that trade, which created the demand for leverage. Essentially, people were arbitraging this by borrowing in other protocols and lending over there. That's possible, but the appetite for leverage started before Luna became a big thing. So I don't think that's the whole thing. I think we just generally had a bull market. People wanted more exposure, more leverage during the bull market. They borrowed, and institutional lenders were not available to actually offer something. Why do I even talk about it? Why is that important? Well, it is important because the market conditions will change at some point. And if they do, the market conditions may change at some points. And if and when they do, and demand for leverage returns, we will see higher rates return. And when that happens, I think a lot of people will say, people haven't learned the lesson. It's all risk again. And at that point, I think it's interesting to look at the difference and say, no, it's not all risk. And what is interesting is, how do we actually get those rates down? How do we get more lending available on blockchains, on publicly centralized blockchain, in a way that works with traditional lenders? Anyways, that's my take on yield. Again, also very different things are being referred to as yield, sometimes incorrectly. And yes, there was definitely a lot of risk in the system, but if you think risk is a whole story, I think that's too simple of a story. Thank you. Let me know what you think in the comments, and don't forget to click like and subscribe.